So, Tyler, it's been a while since we did an update on QuantumScape. Reported earnings in late July or the 24th or so. Earlier in July, we got, I don't want to say you could say it's bigger news, but probably more material news in terms of thinking about the company actually going from this pre revenue state to making money. So let's talk about some things. I think we've identified three things that we think are really important that investors need to know about QuantumScape right now.
Yeah, Jason, we're probably a little overdue for this little update, but you and we got young kids. It's summertime. Sometimes things don't exactly happen on the schedule we want it to happen. But hey, let's do it now because it's worth talking about.
It is worth talking about. And I was going to put it down to thinking slowly about these things so then we can act decisively. But we'll go with the kid thing because that's the actual truth. I'm Jason Hall. This is Investing Unscripted. We're going to take a close look at QuantumScape right now and give you some good insights and actionable information. Before we get to that, though, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you really should check out our special link. It's fool.com/unscripted. Go to that special link and you can get access to the Motley Fool's 10 best stocks to buy right now. Again, it's fool.com/unscripted. Go check it out. Okay, Tyler. So, like I said, July 24th, that's when QuantumScape reported earnings, but July 11th was when there was a big announcement. We'll talk about that big announcement because there's some parts of that announcement that are really, really important. But the first thing, Tyler, is just the very impressive progress that still a pre-revenue company, but considering how short of a period of time they've existed and how consistent they have been with delivering on the goals that they've laid out, like just kind of sure and steady progress.
Yeah, for a business that started off as speculative as it did, is this kind of pre-revenue concept coming out of a lab in Stanford that maybe this could be really interesting if it actually proves out. It has been proven out. And that's in this most recent shareholder letter that the CEO put out during the fourth quarter. They talked about a lot of those milestones that they achieved. They are building prototypes basically for automotive industry to test. And when we talk about testing, we're not just talking about can it hold a charge? How long can it hold a charge? And how many times can we charge it before it starts to die off? Those are kind of the basics. But this is automotive. We're talking about safety. We have to put these things on the road and go through adverse conditions that involve the road. And some of that involves testing things at very high temperatures and making sure that they're not susceptible to explosions, flameouts, some of the battery fires that we've seen from EVs on the road today. And so far, we have seen rather good results from the company, from its safety testing on its prototypes. We're seeing very, very good results that suggest that the battery that they're making is much more stable, which most importantly would allow this to not just work for passenger vehicles, which is kind of what we've been talking about with EVs, but more importantly, talk about larger vehicles. We're talking about commercial trucks, talking about delivery vans, anything that has, I don't know, let's say like more than a V10 or a V12 or a large diesel engine right now. Those sort of things, the EV solution is a much, much harder egg to crack. But if these numbers that they're producing in terms of safety and thermal load and like how much you can basically strain the battery, that if these numbers are proven true and showing up in their results, it another very promising step for this business.
Yeah, I'm sharing one of the tables that they included in the shareholder letter that breaks down at like these different temperatures and different sorts of events, the results of the hazard level. And I think it's really important. One thing, getting all the way up to 300 degrees Celsius, and each of these different events, like for example, the battery being physically crushed or damaged, overcharging the cells, a short circuit event. These were all level 2, a few level 3 events, or just defective, right? There were no ruptures, fires, energetic failure. That is an engineering term that means explosion. So we didn't see any of those sorts of events so far in the testing. But to me, Tyler, one of the things that says about it is that it highlights that the OEM partners they're being serious with their testing. They are being very rigorous. And often we see when there is third-party testing like this happens, the third parties are certainly more aggressive in their testing than we see come out of a company's, in at least the testing the company does that they tell us about, because of the fact that, well, sometimes they want to manage the PR around it. And for the OEMs that are testing these, they have to know that this is a product that's going to be safe and it's going to deliver because their reputation is on the line and their future cash flows are on the line. I shared this briefly. I want to pull it back up, talking about setting and delivering on goals. Last year, some notable things that we saw, some of those cells that were sent out for testing, the test results were very, very good. And this was important, starting to scale up manufacturing. And that's going to tie into this right here, July 11th announcement that this is the second thing. There is looking like clear trajectory towards commercialization. And the agreement between Volkswagen, which is PowerCo, that's Volkswagen's battery manufacturing arm, QuantumScape, they announced a deal in July 11th that is a licensing agreement and a collaboration partnership to use QuantumScape's technology and their process to actually manufacture batteries. And this is something that ties into something that they haven't done yet, which I think is really important, which is bringing Cobra online.
So they use these fancy names like Raptor and Cobra. Basically, what these are a production process for making what's called a ceramic separator. This is the key to QuantumScape's battery technology. Is this very very thin ceramic layer that allows lithium ion batteries to work in the same way that a regular battery does without bursting, leaking, or anything like that. It has to be very precisely produced. It has to be very consistent and not have any like thin spots, because if you have thin spots, that's when you actually get things that break. And that's been the issue for them, is prior to or in prior iterations has been being able to consistently produce this actual ceramic separator at scale. And so as the silly names talk about, Raptor and Cobra, that it's basically once the company is able to prove that this manufacturing process can be done replicable and done at scale and produce, sufficient quality control, or have sufficient quality control on the process that, we can manufacture on a large scale. Basically, it's allowing Volkswagen's PowerCo to take the reins and say, here, use this, build up to 40 gigawatt hours worth of batteries a year, which is what, 500,000 cars a year. That's a lot of production. And more importantly, it's, I don't want to call it free money, but it is much cheaper money for QuantumScape than it would be trying to actually build this out initially on their own. I think we talked about this in a previous video, talking about like the monetization possibilities for this company. And we talked about licensing agreements, because basically by licensing out the tech, you get a royalty payment, but you don't have to put any capital up front. It's very high margin. It's not you know, the most, it's not the most revenue, because you don't get the whole revenue from the sale, but it doesn't require the capital to get it done, which for QuantumScape right now is incredibly important. This is still a pre-revenue company that's burning through
Mhm.
cash. It doesn't have
That's right.
enough money lying on the balance sheet to go build a massive battery plant to get this all done.
Well, that's another part of it I think that's really important is that it's not a ton of money, but part of the deal is a $130 million prepayment towards future royalties that does help bolster QuantumScape's balance sheet to make sure they have enough cash to cover operating costs, R&D, and all of the things that they need to do to get Cobra ready. So again, Raptor is kind of the pre-production process. Cobra is the higher volume production process. And the goal is 2025 to start having Cobra production at these higher levels. So that's the second thing. Yeah, they continue to execute slow and steady, delivering on these goals, maybe a little bit later on a few than anticipated, but they're consistently delivering what seems to be high quality progress towards commercialization. Tyler, let's talk about the third thing.
Yeah. So I guess and you and I have been following this for a while, is for a company that has, I would say, within the bands of tolerance for investors, they have hit their marks. Like, this is a business that, since going public, they said what they were going to do. It's like, we're going to prove that this works. We're going to develop it commercially, and we're going to start making money. We're a pretty long ways down that road. I think we're probably maybe 6 months to a year behind what the initial schedule was. But, for something that's so groundbreaking as these particular battery, that's pretty good. I mean, there's a couple other automakers that have taken much, much longer for some of its new products. Here's the funny thing is, about despite the fact that, for a company that has delivered and done more or less what it said it was going to do, the market doesn't care. The stock has continued to plunge. Investors, I guess, are losing patience with it because they're watching the cash burn and just being like, well, there's every single time the cash starts to burn out, it's going to look worse and worse and worse. To me, I think there's a valuable investing lesson to this because one of the things that you preach as a long-term buy and hold investor is to hold, basically to be able to see through the volatility, make a prudent decision. And I think a lot of investors, probably over the past couple of years, have maybe not necessarily been as prudent with their decision to buy the company and hold it through this, where they're like, "Oh, the stock's down so much from its IPO or from its highs that it must be a buy now because it hit those higher levels and it's gonna get back to that." Well, that's not necessarily the case. What you have here is a business that's taking a very, very long time to develop. It's slowly burning through cash, and it's probably gonna test your patience. And in cases like that, as long-term investors, it's also okay to wait a long time to make your buy decision, to follow a company for a long time. I know we all get that, I don't know, call it the itchy trigger finger when we're looking at a company that really excites us and we wanna get involved with it. But getting involved can simply be just watching it and paying attention to what's happening to it. Certainly from me, who has doesn't have a stake in QuantumScape and has followed it for a long time, I am actually more interested in it today than I've ever been. That doesn't necessarily mean I'm going to buy it right now, but I'm going to continue to follow it and wait for some sort of inflection point like this Cobra production facility actually being delivered to somebody like Volkswagen, things like that where we actually start to see revenue, those are the true inflection points. And those are the times when those sort of things happen, you more likely are going to see inflections in stock price because you're actually seeing inflections in the financial statements.
Yeah, that's exactly right. So, final thoughts on this is yes, the company's made a tremendous amount of progress. It still has earned $0 in revenue in its existence. And it's still worth on the public markets right now close to $3 billion. Until that zero turns into something meaningful, all of the things that are happening in between are just really interesting and potentially compelling. But the business has to succeed by developing a product that it sells. The Volkswagen deal is a massive step forward, but there's still work to be done. Tyler's 100% right. There's still work to be done. And you have to figure out yourself as an investor where you are on the risk curve of being willing to risk your capital. And maybe now is the time to buy if you're a little further out on the risk curve. But like Tyler said, you've got to be super patient and be a business focused investor with this business. Continue to look for signs of moving towards commercialization. Could be a huge winner, but hasn't sold a thing ever. That still means that even though the stock is down a lot, there's still $3 billion between today's stock price and zero. Definitely don't forget about that.